Peter, so as a part of Saxo's 30th anniversary, we are going to have a little conversation on the topic of retail investing and I think democratization of investing overall. And I think it's a fascinating story, and I think you and I, we agree on a lot of the things. And I think I want to go back in time, because for me, if we go back in the 1960s and 50s and before, investing was a game for rich people. Very little access for the broader population, and everyone was just doing active investing. And then we have this guy that founded Vanguard in the US called Jack Bogle, that came up with the idea of passive investing, an index fund, which turned out to be a fascinating story. I mean, can you sort of tell why was this idea so powerful, and what did it create?
Also going just a little bit before that, there were mutual funds, and they had big stories about beating the market, but they really charged quite a lot of money for it. And John Bogle more or less said, he says, I don't want to have the stories about outperforming and stuff like that. Just give me the index return and I'll be happy. And that thought was the basic foundation of creating an index fund. And it is there's no pretend in the product. It is very simple. You just follow that index and you take the lowest cost possible. And I mean, low cost is one of the things, it's one of the pillars of success when it comes to investing. So I think the whole world should be grateful to Mr. John Bogle.
It has been extremely successful. I mean, he created an entire industry of index investing, and it slowly caught on in the US. And I think it leads us to the next inflection point in recent market history, and that is 1990 and 1993, because we had the invention of something called the exchange traded funds, ETFs. It started in Canada, and then it really became big with the SPDR ETF that tracks the S&P 500, the index.
The oldest one.
The oldest one, and I think one of the biggest ones in the world today even. So what is an ETF, and why did we need an ETF to really take the passive investing and index trading to the next level?
An ETF is just nothing more than the basket, and that basket mimics the underlying index. And the S&P is the most well-known index in the world, but you also got it for countries like the DAX in Germany, the AEX in the Netherlands. And in that sense, there's no pretension. The basket, the ETF, just says, I'm going to replicate exactly what is in the index. So if the index changes due to a rebalance, you will see that reflected in the ETF. And another point of being successful in investing, you have to diversify. And if you buy a basket, you don't buy one stock or two stocks or three stocks. No, you buy a basket. And with the S&P 500, you got 500.
And that's a very crucial point, because we're talking about retail investors, and retail investors and Saxo clients also tend to, at least when you start your investing journey, to have very few stocks. And it is so ingrained that you buy single stocks, because that's the stories. But so are you saying that everyone should basically just start with getting an index exposure, and then you can talk about companies and single stocks afterwards?
It would be my ideal world.
Your ideal world?
No, if somebody would start, he'd just say, all right, I'm going to start investing, and I will start with an ETF. And then just think of you coming from Mars and you don't know anything about regions or sectors or performance or anything. You just know investing in worldwide stocks will return you 7-8% annually, more or less. So that should be, I think, the starting point. And everything you do on top, you make it more explicit. You make more explicit choices there. But it is not sexy, though. No. That is, I mean, just invest in one particular stock. That is nice, that is appealing, there are the possibilities. I mean, an index won't double in a year. And a single stock could triple or quadruple. So that is a different story.
And it's not something you talk to anyone about at a cocktail party. It's more fun to talk about an exotic company that does something very fancy and interesting.
But in my view on how to invest, there's still room to do so. But not with all your money in one single stock name.
Retail investing has become extremely popular. And Robinhood, and we've also seen it here at Saxo, the number of clients that have opened accounts is just, it has exploded. There seems to be a bigger interest than ever. And on the one hand, it's good. And maybe you can talk about the good things, but I also want your perspective on this whole meme stock we have seen, because I think part of our conversation is also to bring some lessons. We're talking about diversification, and maybe also some perspective on when something becomes too much speculation, where it's actually almost it will end in a disaster.
Let's start with the pandemic.
Yeah.
And the pandemic, we saw a market decline that was remarkable, to say the least. It was extremely quick, and I would say there were quite some people considering starting investing. And if that happens because it was a zero interest rate environment, and then you get a discount of 20, 25, 30% even. And that might have been the case for some people who said, all right, I'm going to step in now. I do get a discount. And with hindsight, they did very well. It also attracted, also because of the working from home, new investors. And the question is, should you call them investor, or are it traders, or are it speculators? I would call them, I think, the last one. And I don't like the word, but it is, I think, a speculator.
All these new investors that came into the market, as you said, you labeled them, although you didn't like it. A lot of them are maybe speculators, and the counter argument can be that a lot of them were young men and women that came in, and they came into a very strange period with, as you said, a very strange drawdown, and then we had a massive bull market, but that bull market, as I recall it, is one of the fastest and most explosive bull markets of all market history. And I think it started as speculative behavior, and I mean you have seen it, and I think this conversation should be a little bit about maybe warning a little bit about getting too overexcited when you have a bull market. It can lead you down a path where it can end up in a very bad way.
Yeah, I think you have to make for yourself a distinction between trading and investing. And then I would say speculating is even more risky than trading. So the boring part should be investing. We talked about the ETFs. They're perfect building blocks for building that basic portfolio. And if you're going to become a little bit more active, you come to trading and speculating. I think especially when you're young, the testosterone coming out of your ears if you're a guy, and it is something you have to do. But my lesson would be, or my advice would be, just do it with a little bit of your money. I mean, you can take risk with your money, but are you prepared to take risk with 100% of your money?
"30 years have gone." I mean, how do you see the next 30 years? I mean, I've been thinking there's maybe a limit to how low we can go on cost. So have we built everything we need, or do we have everything we need to be a good investor a long time? How do you see the next 30 years? We'll get more retail and different products?
I think we will get more retail investors, because a lot of people will see and recognize to save for your future doesn't work with low interest rates. So the thing you have to do, you have to make your money work for you. And one of the easiest places to do so is on the exchange. And it will be, let's call it, boring investing. And that's the way to go. And if you want to make it a little bit more sexy, you add some themes and even some individual stocks on top. But I think that it will be the way to go, because on the other side you also see the governments pulling back. Yeah. So the people they are responsible for their own future, also financial. And in that sense, it is a gospel that Saxo has to tell. Be invested, because in the long run it pays off.
I think it's a very good point, because it seems like with the demographics we have, at least here in Europe, but also to some extent in the US, I think Europe is probably leading in this way because of our demographics, but and our big welfare states, that it almost seems like it's impossible for people to live a good life on public pension here in Europe going forward. So I think you're spot on this point that you need to take ownership of your own investments and save for the future.
Yeah, but it means that, and in that sense, the ETFs plays an important role because it's a very, very accessible instrument. And in that sense, we also have to demystify investing and trading only for those who want to.